Hi everyone, let's have a look at my medium time frame and low time frame bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with my medium time frame bearish scenario, where we're looking for a three-wave structure in a WXY, with inside the final Y a zigzag structure, which is an A, three-wave B, and then eventually a wave C to the downside. Now we don't yet know if the wave B high is in. Preferably I'm looking for a little bit more upside, because then the most common target area for wave C is going to have confluence with my yellow target box down here, which is sitting between 24,850 and 24.3k. Now currently the most common target area for wave C being between the 1 and the 1.236, which is between 25.4k and 24.5k, is pulled from the high of X to the low of this wave A to the high over here at my target box at the 786. And only if price is going all the way up here do we get the pivots, the target area for wave C, all the way down here. And I would like the target area for wave C to be around this yellow target box, and that's also the reason why I am actually looking for eventually another move to the upside, either down and up or maybe up here from the little target box that we have over here, but eventually a bit more upside. Because if I'm changing the pivot over here, the target for potentially the B high, you can see that if we're going to reach the golden pocket, which is about these highs as well at around 28.3k, you can also see that still the 1-to-1 and the 1.236 is around the yellow target box. However, if this is the high of wave B already, you can see that the most common target area for this wave C is below the yellow target box, which is actually not something I like to see. So preferably price is going to find a little bit more upside, either at least taking these highs at 28.3k and maybe even continuing towards the target box over here for then a target area for wave C, which is right around the yellow target box, for some great support, after which we can then expect a move to the upside. In a more bullish scenario, we do not expect another move to the downside, but the wave is already finished, C is already in. In this particular scenario, we've been looking then for a zigzag structure in a 5-wave move in A, complex structure in a wave B, and then another 5-wave move in a wave C, hitting the most common target area for wave C between the 1 and the 1.236, pulled from the beginning to the end of A to the high of B, which sits between 25.9k and 25k. In this scenario, I have seen sometimes that people call this a 1-2, 1-2, and then a 3-4-5, but that is invalidated because of what happened over here. So this cannot be a 1-2-3-4-5 because this wave 4 entered the price action of wave 1. There is overlap between this wave 1 and then potentially the wave 4 that some people have, I saw online, but that is not right because wave 4 entered the price action of this potential wave 1. So that is a scenario where if you're looking for more downside, it can't be a 1-2-3-4-5, at least not this can't be a 1-2-3-4-5. So then you have to be looking at this to be a wave 1, 2, then another 1, 2, and then eventually more downside in a scenario like this, 1, 2, 1, 2, and then a bigger move to the downside. That is still possible, but at the moment as it stands, an alternative, because we were actually talking about this scenario where we're looking at for the ABC already finished and then a move to the upside. Now usually a wave B is a little bit less steep and actually takes a little bit more time than a wave A to form, and this wave C takes less time than this wave A to form. As you can see, it took about 68 or 61% of the time it took to develop wave A, which is shorter of course than wave A. So we have to wait and see what happens on the lower time frames. But yeah, in this scenario, this is the low and we expect more upside. I do think if this low is going to be taken, more downside is expected to at least the yellow target box, which I think is actually quite a likely scenario, to be honest. If we then go to the lower time frames, basically by the way, meaning that looking at the structure we have over here as well, I think the bearish scenarios are more preferred compared to the bullish scenarios where this is the exact low and we're looking for upsides. But more about that right now, because if we look at the lower time frame scenarios, I want to start with the bearish divergences, because we have bearish divergences between the low over here and the lower low, and the target of the divergence over here, a lower low in price but a higher low in the CVD. The target is going to be this low at 26.5k, and actually the more lower time frame bearish scenario or bearish divergences between this high and this high, sorry, it's between this high and this high, of course, not the lows, but between this high and the lower high over here, so a lower high on price price, higher high as well on the CVD, but this target has already been reached at 27.1k. So if we go to the CVD chart I have over here, you can see we have a lower high on price, but on the yellow line we have a higher high on the CVD, which is a bearish divergence. And then locally over here, lower high on price, but a higher high, let me actually do this, a higher high on the yellow line as well as the blue line. So a double bearish CVD divergence between the local highs over here, which then creates a pressure to the downside as longs are absorbed for then downside pressure. Now this low has already been taken. This is a very important target box in my opinion, which sits between 27.1k and 27k, and I do believe that if price is going to push through this target box, which it might do as it stands now, we're going to be looking for this low over here. So let's then look at the scenarios that we have on the lower time frame. This is the bullish scenario, with this then being a wave 1, zigzag in 2, and then another 1, 2 for then a bigger 3 to the upside. Now in my previous video, I explained to you multiple reasons why I believe this is not a preferred scenario, but it is strongly an alternative scenario. And I wrote 3 reasons over here in the box. First of all, this being a wave 1, it is very difficult to count a nice and clean 5-wave structure in this wave 1. It more looks like a 3-wave structure than it looks like a 5-wave structure. Now, I tried to count 5 waves in this move to the upside, which I've done in previous videos, but because of the clutter, I removed it. But it looks better as a 3-wave structure. However, in this scenario, it has to be a 5-wave structure. Secondly, if there is a 1-2-1-2 scenario, you want to preferably see a diagonal. That is most common, which basically means this is a wave 1, then a wave 2, then the second wave 1, and then 2, 3. The second wave 1 is going to take the high of the first wave 1. This is by far most common in a 1-2-1-2 scenario before a bigger 3 to the upside. However, this wave 1 over here did not take the first wave 1, which is uncommon and therefore gives a lower probability of this scenario playing out. And then finally, what we're seeing, of course, then is the bearish divergences as explained just now, which goes against this scenario because it has downwards pressure, with one of the targets being over here at the low of this potential blue wave 2 at 26.5k. Now, you could potentially think, okay, this is a 3-wave corrective pattern in a zigzag, which then is the end of wave 2. However, you can also think about this whole corrective structure a little bit differently, where the wave 2 is going to be more towards the right. And if we then remove this ABC and this structure over here, we're then looking at this to be a wave A, expanding flat in wave B, and then we're looking at a wave C to the downside. However, this being a C to the downside, basically this structure over here kind of invalidated a wave C for me, because a wave C usually is quite swift and nice to the downside and doesn't have like these clear retracement structures to the upside. So preferably this is true, and then the invalidation for this scenario is going to be taking the low over here at 26.5k, which if we zoom in, price is starting to move just below the target box that we have. And if that happens, I do think we might see some more downside. Then the more bearish scenario, which I mean at the same time we do expect a move to the upside, but in this particular scenario we have this as a 3-wave structure in an ABC, which is a zigzag, so a 5-3-5 wave move, followed then by a wave X, which is also a zigzag, 5-3-5, very nice, before then eventually continuation to the upside in an A, B, C, so another zigzag, which then creates a double zigzag structure in a WXY, being a zigzag X, which can be any corrective structure, and then another ABC to the upside. But what I don't necessarily like about this scenario is that the target area for wave C over here, pulled from the low to the high of A to the low that we have at B before this little drop, is actually below the most common target area for wave Y. Now, it has to be said that another common target for wave Y is the 0.618, so we are actually pretty close to that target. But most commonly, you will see wave Y ending between the 1 and the 1.236. So the target area for wave C over here is right in the middle. That also means that if price is going to dip deeper to the downside, the target area for wave C is going to move to the downside as well. And as long as the low over here at 26.5k is not taken, then the target area for wave C can still be around the 0.618, which is still a valid target for potentially the end of wave Y over here. Before then, we expect a move to the downside. That is the expectation of this scenario, because a WXY is a corrective structure after which you expect continuation of the trend, which therefore is more downside. And if we then look at a more longer wave X, where this still is an ABC in a W, but then this is a full corrective structure in a wave A, expanding flat in a wave B, and then again we have a wave C to the downside. And I already explained wave C, I prefer to see something like this, but now in this wave C we have a bit of a 1, 2, maybe 3, 4, 5, a little bit of an extended structure. It's not preferred, but in this scenario that's the case. Most common target area for wave C is between the 1 and the 1.236, which is between 26.7k and 26.5k. However, one very important thing is the daily naked point of control below that target area at 26.3k, and two of these, volume and proof of support, because if price is going to move to the downside, we have to keep into account that we could see just a dump to the downside, right? And this then being a finished structure, and then an ABC, which is the end, and then continuation to the downside. However, this then being a wave 1, right? So this then being a wave 1, 2, and then a bigger 3 to the downside. And one has to look at the volume. So if price is going to move to the downside very impulsively and vertical to the downside with volume increasing, there's no way there's a potential trading setup over here. Preferably, you want to see some proof of support. Maybe price is dumping, then goes up, eventually a change of market structure where the high is taken. Maybe you get a retracement to the upside and then a move to the upside, retracement to the downside, some bullish divergences for then eventually a bit of proof of support, but you want to see something for eventually a move to the upside. And that of course depends on your strategy, your plan, and whatever you want to do with your trades, of course, because everyone has or should have their own plan. But important, very important, is this white target box. If this white target box is holding, then I can imagine we are going to get something like this, and then a WX and then a 3 wave in a Y for then potentially more downside. That for me is the most likely scenario if we hold this target box, because in my opinion this bullish scenario in a 1, 2 and then more upside is not preferred. It's an alternative scenario in my opinion. So either on the low time frames, I'm looking for this to be a WXY, where we then look for higher targets, and therefore also neglecting the bearish divergences between these highs over here with the target down here. But if these bearish divergences do play out, then a potential reversal at the daily naked point of control at 26.3k can be true, for then eventually a WX, and then eventually looking for a wave Y to the upside. So I hope this video was helpful or valuable to you. Please check out the macro and high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.